Hey YouTube, what's going on? We are back for a FOMC session live stream. Let's see if we get some people to join first before we really start. We still have time until the New York Open. Stream is healthy, that's all we want. Good morning, guys. Or good afternoon, or good evening, depends on where you're at. We're live again. I'm still hanging around here for a little bit while we wait for a few more people to join. If you already have some questions or anything, I mean, we still have time until 9:30. Feel free to ask them in the chat and make sure to give the stream a like. Did you take any trades during the London session? We had a live stream going on earlier this morning, but only for the VIP members on Discord. I don't want to trade on YouTube and Discord at the same time. Usually it gets a little bit laggy then, but I uploaded the entire live stream recording to YouTube right here, London Killzone live stream recording from the 1st of November, and this was the live stream execution. We can watch that here together. So let me explain while I got filled in this trade. So right here we had Asia buy side, or drawn by the ICT All-in-One Indicator. We had the Asia buy side, we had the 2 AM open, and we ran this buy side. So right once we opened with a new hourly candle, we saw that surge in momentum. We continued above the daily opening line, also being drawn from the ICT All-in-One Indicator and above the midnight level. Once we were above the midnight level, we only fill that highest fair value gap and deliver into buy side. We open up with a volume imbalance right here, and we don't fill it. So right here, we saw that wick retesting the volume imbalance. We open up, we retest the previous closing price. Here we open up, but we don't retest. So this will be more important later on. And we continue to run buy side, forming the current high of the day. The previous day's high is a little bit above us. But anyway, we formed a low, a high, a higher low, and a higher high. We displaced and we closed below our market structure shift level right here on this candle and continued to reprice into these bullish fair value gaps right around the VWAP. And with Dirty Ryan together, we took the short, one of our Discord VIP members, from this bearish fair value gap right here, targeting the sell side liquidity from 5 points. You can see initially we ran. I turned off the multi-time frame volume imbalances. At this point in time, I was talking about if this candle is closing above the bearish fair value gap, that I'm going to get out of the trade. But we didn't close above. We open up with a volume imbalance to the downside. And if you take a close look, I think I drew this in later on throughout the live stream. Initially, when I did all my markup at the beginning, you can watch the entire recording if you want to afterwards. We had this unfilled volume imbalance, and initially we kept holding support. We had no candle closing below it. We bounce right here, that's that level. Off it, fill the bearish fair value gap, and we continue lower. Where's that high of the wick? It perfectly aligns with this unfilled volume imbalance. So this was really important. So we rejected very quickly. Was a long trade of 20 minutes. We had the same setup on NQ, market structure shift, bearish fair value gap. We drew that in. Some sort of a turtle soup entry where we took out the high and then rejected. We're still on the trade, and at this point in time we had bullish SMT divergence because NQ already took out the sell side liquidity. We're still waiting for our take profit. Here we have to blow our free candle by the ICT Indicator. Waiting for a close below this bullish fair value gap. And then I drew for all the order blocks. But I think it's going to take a little while. Talking about some retracements here. Open up a big bearish volume imbalance, so this was really good. And right here you see how I drew in all the order blocks. Doing all this live while it's happening. So right here, first order block, we retrace into it, we reject. We leave behind our second up closing candle. We continue lower, we reprice into it, and we reject. So right now I wanted to see that same thing happening for the delivery into the sell side liquidity. We see we get that push up very soon. On the take profit trade account. Order block, order block, order block. Catching up with everyone on Discord. Touch the order block. And we reject from it. Now the music is over. We still touch the order block. Tap the VWAP. Yeah, and then eventually we rejected. We hit our profit target and we were done. Nice London execution. If you want to watch the entire recording, it's on my YouTube channel. We do this like 2 or 3 times per week, where I only trade during the London kill zone. I mean only on Discord. So make sure to give it a watch. Let's see, we have 2 people watching. I mean, that was just a video in the background with the voice. Let me check it out if it's that bad. Yeah. Target also being drawn from the ICT all-in-one indicator and above the midnight level. Once, let me explain why we'll liquidity for 5 points. You can see initially we okay. Sorry, I didn't knew that was so loud, but thanks for letting me know. Well, I mean, I can go over it again without having my noise on the computer on. Essentially a very clean 2022 model. We shifted structure. And yeah, we rejected from each and every order block right here. Every up closing candle we repriced into it and rejected. Up closing candle, we reprice into it and rejected. We did the same thing here to finally deliver into sell side. We eventually even hit the Asia sell side liquidity pool after taking the Asia buy side liquidity pool. 2022 model with a market structure shift, a bearish fair value gap, and the continuation lower. Very simple, quick $250. Let's see how we go for the rest of the session. Discord. Let's go back to the live stream and see have we... Nope, not yet. No questions here on Discord. Let me make sure they also know I'm live. Unplanned live stream today. Let's go. All right, no questions. Let's get ready. Skip the ads here quickly. The ads are only for the free viewers on YouTube. If you're a Discord member and you watch it on Discord, there's no delay and also no ads. All right, we see that we managed to push further to the upside above the previous day's high. So right now, this was yesterday's scalping, Monday's scalping. Let me actually turn off the executions here and get started. So we can see that ahead of FOMC news, if we go to the daily time frame or simply use the ICT all-in-one indicator, multi-time frame fair value gaps, we scroll down and we want to see the daily fair value gaps. Done. That might be a little bit easier. All right. So we can see we're inside a daily bearish fair value gap right now as we speak. Inside here, go back to the 5-minute time frame. We are on day 3, day 1 bullish, day 2 bullish, day 3 bullish. Every time we took out the previous day's high. Very similar, we always had that initial run up and then we continued higher, initial run up from the Asia low. So we have plenty of sell side liquidity, maybe going to be targeted tomorrow during, no, not tomorrow, later on during the PM session with FOMC news. We will see about that. This is our Sunday divider, Monday, Tuesday, Friday. This entire layout, it's pretty clean and all done by an indicator. If you want to check that out, the link for that is in the description. I like it especially if I'm not at home and I'm charting on my phone to see, yeah, where things are, and I can simply control them with this control panel. Multi-time frame volume imbalances, no, I don't need them right now. We don't have the opening yet, but I will turn on the regular trading hours opening gap. Then we see a history of these gaps on our chart. Right here, this was yesterday's regular trading hours opening gap. Yeah, we saw most of the consolidation. We already talked about that during our London live stream. What happened yesterday? I can quickly talk about it here again before we get the opening. I did the analysis and shared it on Twitter and also on... Wait, something's missing. Ah, yeah, because we're in current mode. Let's go in replay mode. Let the indicator load up here quickly. We had a 2022 model at 8:30. I shared this one with all the Discord members. Off the breaker block, bearish fair value gap, continuation into London lows. Down here, if we measure the standard deviations, we had a -3 standard deviation and a -1 standard deviation of the displacement, perfectly aligned with the London sell side liquidity. We took that out and we had SMT divergence with NQ because NQ actually took out this low. Where did we bounce from? The midnight level paired with a little smaller SMT because NQ actually made a higher low here, while ES made a lower low. We got our market structure shift with our new displacement. First optimum trade entry paired with a 1 minute breaker block, 1 minute fair value gap, played out perfectly. If I go to the 1 minute time frame here, you'll see what I'm talking about. Bullish fair value gap, breaker block, optimum trade entry, boom, back into buy side liquidity. Continuing on the 5. What do? We measure our displacement leg from low to high, and our second move to the upside very well as well, from the low to the high. I also measured the standard deviations and the retracement for the entire time after I ended the stream, from 11:10 until the end of the lunch hour here at 1 p.m. We pretty much consolidated inside of the range below our AM session high. And our AM session low. We pulled back once again into our optimum trade entry, paired with this bullish fair value gap, paired with the order block right here, mitigation block. This was the regular trading hours opening gap. We continued to push. Initially, we've been held up by this old breaker block from here over to the left until, notice the time, exactly at 1 p.m. New York local time, we push through this AM buy side liquidity. We closed above the breaker block. We use it as support afterwards. Once again, hit an optimum trade entry, and we continue to deliver. And where did all the standard deviations from this displacement and the second leg to the upside before we took buy side ended up? Right here. Our first standard deviation from the displacement leg, and our second standard deviation from our second push up higher before we retraced again, and then we expanded starting right after 1 p.m. And both these targets lined perfectly. We hit it, and we formed the current high of the day, after which we retraced and started the new day. Pretty clean what we saw yesterday. Of course, hindsight, but it's good to train your eye with that hindsight experience. What time is it? It's 27. If you have any questions about that, I explain it more in depth during the London session live stream. If you want to watch that, the link for that is here on YouTube. Right here on my channel. Sort of running low on time before we get into the New York Open. View your channel. Let me turn off the Discord sounds. Make sure it's not annoying. Videos, that's the live stream execution, and that's the entire live stream recording where we covered yesterday's entire day, today little recap, and the morning London session. Yeah, me neither. Fate TV, honestly. But, I mean, it's a free day, and why not? I won't be streaming for too long today. Let's see what we get after the New York Open. Currently, we're at the high of the day. We're inside a daily bearish value gap, and what I like to do with those, especially if they're so big, I like to dissect them into quarters. We can see we just hit the 50% of our daily bearish value gap. So far, the daily candle is pretty bullish. We had news at 8:30, the 8:30 opening, the midnight opening. Comes in right here, almost where we open with the daily candle. We have our new day opening gap. That's all already on our chart. We hit the 50% and we didn't close above it. What's the time? It's 29, so 1 more minute until the New York Open. Let me just... Forgot something here before I started doing the stream. There we go. Okay, regular trading hours opening gap is there, already drawn. 1 hour chart by our precious little friend. New York opened up right here on this candle. Let's see what we will get. Market structure shift down here, but nah, not right after the open. A 15-minute time frame is pretty bullish. 1 hour time frame, same story. Let me actually hide the drawings from yesterday now. We want a clean chart. Yep, still working on fixing that beta version. Power of free candle, let's put that 40 pixels to right. Perfect, so it's not overlapping. We started to sell off right after the New York Open. If we were to look at 50% of our retracement right here, would come in right at the 25% level of the daily bearish fair value gap, overlapping with bullish fair value gaps here on the 1 minute time frame. But I'd like to see some more confluence before we do anything here. 5 minute time frame, filling some bullish fair value gaps left behind. Let's take a look at NQ. You can see at the same time NQ is going to the upside. Interesting. We're starting to fill in parts of the regular trading hours opening gap. All right, let's see if that's still persisting. Yeah, NQ is pushing further to the upside, while ES initially moved to the downside. Already a discrepancy right at the open. Usually if we see them doing different things, that's a good sign. Oh yeah. Good sign when you could avoid taking trades during the session, especially also because we have FOMC news. Any questions on Discord? Nope, not yet. Hey Mali, welcome to the group. And Q's still pushing. Yeah, still retracing. 5 minute time frame, closing in 1 minute. 15 minute retracing as well. So right here, this orange line is our previous day's high, all these relative equal highs. Boom. We have our daily bearish fair value gap that we are inside of right now. We split that up in 2 quarters. We got rejected of the 50%. Maybe a retracement to the previous day's high for the continuation up higher. We have our regular trading hours opening gap right here. The midnight level down here. And the low of the daily bearish fair value gap right here. 2 dashed lines actually. Let me change that to dotted lines. Makes it a little bit easier to look at. The 8:30 open down here and the current low of the day at 4191. All brought by us by the lovely ICT All-in-One indicator. I mainly developed it for myself, but I think there's really some value in it for other people as well. This saves me a lot of time during the live stream doing all the drawings. Keeps it simple, especially if I'm on the go with my phone and I want to check the charts. I don't have to use my big thumbs to try and draw a horizontal line to see where that midnight level is. I simply open up the settings, I turn on the midnight level, and everything's on my chart the way you want it to. Okay, so we still consolidate here on ES. We have a bearish value gap. We could use that to deliver lower, but it's too risky if I see NQ push to the upside while ES is still remaining still or even retraced. DXY. Let's take a look at the DXY and use delete all the drawings. We don't need them anymore because we have something better. It saves a lot more time. Now the timings will be off here because it's a different. So the settings for the ICT All-in-One indicator are tailored to the CME future charts. So for it to match up perfectly with what we need here on the DXY, do we have a DXY CME chart? Nope. But you can obviously see previous days high. Yeah, all that's not lining up because the timings are not correct inside the indicator settings. There's no way to do that automatically. So it doesn't really help here. Still working on that. It's a baby. I started developing it 1 month ago. Over 2,000 lines of code with the beta version, where I included the regular trading hours opening gap, this purple box right here, and SMT divergences, which we're currently forming right here. Still a lot to be improved and implemented. And of course, if you have some feedback, feel free to share that with me. Or make sure to share that with me. That really helps me in the development. We're still going sideways. Did anyone take any London session trades today? I think the London session was... Yes, thank you, Shoes here. Having a fantastic morning. London session profits, very clean 2022 model. I did some other stuff too. And right now decided to jump on for a quick little live stream. So the DXY pumped up. Where's 930? Right here, but we don't really see the DXY respecting the opening times too much. The 830 news impact took sell side, went back to the upside. Could be kind of a unicorn model right here, where this becomes our breaker block, old resistance being turned into support, where we could potentially see a retracement too, and then bounce off. After taking the sell side liquidity here, we shifted structure back again to the upside. But we could also just continue to expand. If we go to the daily time frame, you can see we're pushing buy side liquidity targets. We already took out this buy side at 106,974. The next daily buy side liquidity pool would be here at 107.243. and up here. So for all the foreign currency pairs, I'd only be looking for shorts today. We've been holding pretty nicely. We had this bullish share value gap here where everyone expected to hold support to deliver into that buy side. It did, but before that, it took out weekly sell side. So it took that previous week's low. Last week, Monday, immediately bounced back, closed back above our bullish share value gap, kept on holding support here, and delivered into buy side. 1, 2, no free drives pattern here. Taking some internal, continuing this overall rally to the upside. There are the buy side targets. If we measure from the high to the low, you can see that we're also exactly at the 50% level here on the DXY. So it was reasonable to expect some sort of a sideways movement. And the next buy side liquidity pool above the 50%, we already took out this one, would be right here at 10798. But I do not expect that to be hit today. Maybe with FOMC news later during the PM session. I think the probability for a rate hike is 0.8%. So I think that it will remain flat. What impact will it have on the market? Depends. Hard to tell. Market makers use these news events to achieve or to reach specific liquidity pools because the order book right ahead of the FOMC news is very, very, very thin. Most of the big players, they remove all their orders because it's just too easy to get slipped. And once the order book is really thin, it's really easy to manipulate it and create these huge wicks that we sometimes see. And today we likely see that same thing. That's why it's easy for them to actually move price into a specific direction right once we get the news, because that order book is so thin. Hope that makes sense. If you have any questions about that, feel free to ask. Still sort of going sideways here on NQ. We only went up here on the 5-minute time frame after 9:30. We also took out that previous day's high from the low of the day right here without a need retracement. That's all done. This was our London session short. We do not need that. We have all our drawings from the indicator, or the important ones at least. Let's add some daily bearish value gaps. I think there's also a learning curve to the indicator. Of course, I'm pretty good with it. I've created it basically. Previous week's high should be right here, Tuesday's high. We should see a red line right here. We have our daily bearish value gap. We're inside of that right now. Same thing goes for ES. ES is now also pushing. But I'm not fully trusting it just yet for a opportunity long. We closed right at the high of the bearish fair value gap. Let's see if we can close above on this candle. Yes, we did. We have another tiny bearish fair value gap right here. So right now we would expect support here, unless the market's playing with us after such a consolidation right after the open, and the big difference between ES and NQ here. Most of the time it's better to stay out and wait actually for a half decent setup. Right now I feel it's more like forcing something, because you see NQ go up and ES consolidating. Doesn't mean that ES immediately has to follow. If you jump in long right now, could still take out sell side before we go up. We all know it's not that simple. The XY is starting to retrace here on the 5-minute time frame. We see that as well. Put on a high. We have our area where we would expect support. Could also simply use ICT fib retracements. New 5-minute candle. Let's see if that delivers a push, and new 15-minute candle. So that's our first 15-minute candle after the opening. New 15-minute cycle could help us to deliver to higher prices. I hope no one got involved just yet. Theoretically, if we really look at it, we made a high, a higher high, and this would be our market structure shift. For the sell side continuation, we just filled the bearish fair value gap for the continuation lower. Let's see, let's try a risky entry right here of this bearish volume imbalance. We have to warm up at some time. Buy one stop. Alright, that's not looking like that's gonna work out. Those are the aggressive entry types, but looks like we got a push. We do not respect any inversions, at least of right now. So a small little loss to start off with, but not an issue. NQ still continues further to the upside. And now we get that push with the new 15-minute cycle. This is the 50% of the daily bearish fair value gap. And from here on we continue. We took the buy side liquidity. So let's see what the market wants to do. This is only paper trading today, by the way. I wouldn't risk live money after already having made my profits during London on FOMC news days. We see the discrepancy between S and NQ. Just playing and testing on today's live stream. Like a professional athlete, they also go to practice almost 5 times per week. And we as traders sometimes feel like, yeah, we don't have to. We know how price is being booked. I much rather gamble the profits I made on my challenge account or on my funded account. That's not the way it works. Be proud of your paper trading account. I am. I have my paper trading account right here. I call it Apex 50K. And I'm really trying to simulate a Apex 50K challenge here. I don't enter like a lunatic. I still take the same entries that I would likely take on my funded account as well, but just as practice. And I do not, whinge if I have a great winning day on my paper trading account. I already had a winning day. And those are my rules to stay disciplined. I am more free and I can test, I can practice. I really like it. Some people jump in with 10 or 100 contracts on their paper trading accounts just for the fun of it. Of course, you can do that too, but I don't know. I like to take it seriously. We closed above the high right here. So let's see if we can get any support out of that. My next target really would be the 75%. NQ still continues to go further to the upside. So let's see if ES wants to catch up with that. What's a nice little target? 5 points. Go to break even here. Let's see if we can catch 5 points. We left this volume imbalance open. That's nice. We entered initially off this inversion fair value gap. Right here, we rejected, delivered lower until we closed above it and above the 50%. This was the main confluence for me, really. We kept holding support as we're supposed to, open up with a bullish volume imbalance, retested the closing price and pushed up higher. Now let's see if we hold support on this old resistance level. We closed above it. We want to see a continuation push higher, similar to what we saw in NQ. But daily bearish fair value gap here from the indicator is also significantly bigger. Let's see. Percentage. Come on. There we go. So on NQ, we actually didn't hit the 50% of that area yet. We leave that on the chart. We do not have any new bullish fair value gaps other than this one down here. Let's see if we hit our 5-point target. Let me check the YouTube live stream if we have any questions. Doesn't look like we have any questions on Discord. Feel free to ask if you have any. That's what I'm here for. YouTube. Nope, no questions here on YouTube. Okay, so after this expansion, we hesitate for a little. No reason really to believe that we're gonna get a sudden retracement. The DXY is pulling back, like we spoke about. We would expect some kind of support around this area. Old resistance turn into support. Where's the 50%? Down here. Very nicely aligned with the 61.8 for the continuation higher or a Tudor swing to the upside and reversal back down, which would really help us for this up move. Okay, so we failed to continue higher. We didn't hit our 5-point target from our entry on the inversion. If we tap the inversion fair value again, I'm happy to get stopped out at break even here. Yes, Darren isn't really just willing to move. Unlike NQ here, 1 minute time frame, 9:30 opening. Yeah, 9:30 opening. No bullish fair value gaps. Bullish fair value gap kept on holding nicely. We have SMT divergence, 9:47 to 9:52. 9:47, 9:52. We made a lower high right here on ES. But I like how we keep on holding this old high. We closed right on the high of it. No reason to worry just yet. Inversion fair value gap. Not really respected, so I'm going to get rid of this one. And there goes our 5-point target. We just took buy side above these two equal highs. We tapped it, but we didn't get filled yet. The XY keeps on retracing. So we lost 150 Now we're about to make 250. On the paper account, we open up with a nice bullish volume imbalance again. But let's see, since we already took this high, what's going to happen. There's no 2022 model or anything just yet. Until we get one, I want to see one on a higher time frame. Right now we're just expanding. We got a clean one during the London session. Not willing to risk any of the realized profits on the FOMC news day. I know FOMC news are at 2 p.m. and then the press conference is at 2:30 p.m. But yeah, that's still some time to go. But still, usually we have kind of a more random marketplace than usual. We took the high, now we likely take the low. We're consolidating here. What's NQ up to? NQ is already retracing deeper. That's the way, shoes here. That's the way. And it's already coming down to practicing yourself. It's not going to happen overnight. But with a lot of patience and a lot of failures, learning from these mistakes, you're eventually going to get there. All I'm using is that ICT language, basically, and the few things he... Yeah, don't want to say something wrong here, but mainly the language is what I use to frame these trades. But whatever you use, if you use old support, turn into old resistance, turn into support, support and resistance, basically. Doesn't make a difference, but I made this really work nicely for me. Inversion fair value gap. And Q went much lower here. I've been doing different things the entire morning, or the entire 30 minutes. It's 9:57, so we want to make sure that we stay ahead of the time. We get a new 15-minute candle in 2 minutes. Starting a new 15-minute cycle. The last 15-minute cycle initially retraced, and then we expanded to the upside during that last 5-minute period, or during the last 10-minute period of the 15-minute cycle. So right here we got a new 5-minute candle. Then at 9:50 we got a new 5-minute candle. We continue to go sideways. So let's see what happens with that new 5-minute candle. Maybe we take some sell side, stop us out at break even. It's really not worth it to hold on to the trade if we want to get stopped, because we can already see NQ tanking a little bit more here. Let's see how this candle is closing. It's 58, so 1 more minute to go. We keep on bouncing off the inversion one more time, yet we're still around to 50% of the daily bearish fair value gap. NQ is retracing further. The DXY is finding some support in this bullish fair value gap. We took some lows after taking some highs. So we took the highs, we took the lows of this little range. Let's see what's happened with that new 10 a.m. candle. $15 seconds to go. Keep in mind, we're watching a time-based chart, so being ahead of the time. being ahead of what's happening on the higher time frame. Oh, funny. 10 a.m. Did we have news at 10 a.m.? I'm wondering. Our 5-point target would have been hit. Yes, I will show that. Fade TV. Forex Factory. Oh yeah, we have PMI news at 10 a.m. Okay. I didn't know that. I didn't really prepare myself properly ahead of this live stream because I didn't plan on trading my funded account. At 2 p.m. we have the federal funds rate. Okay. All right, so we hit the 75%. Our entry would have still worked. We delivered into buy side of our inversion fair value gap. So I take this as a win. Risk management wise, it was the smarter choice, especially ahead of news, to stop at break even. NQ made a lower high right here. And let me talk about the midnight level now. Let price do what it wants up here. Trying to get longs in at the high of the day. It's not my specialty. Still, we framed the long of the inversion fair value gap and it played out nicely. Now we got a 10 a.m. news candle rejection. It could retrace to the 50%, could go above it. I also could care less. You have to be smart about picking your battles. And today is the day where I say, no, I live to fight another day. And I can trade paper, getting in some practice, sharpening the skills, sharpening the tape reading skills without taking any damage. How cool is that? The midnight level here on ES this morning. Let me go to the 5-minute time frame. Where are we at? Down here, that's London kill zone. Let the indicator load up here quickly. Get rid of this. Okay, the DXY dump further down. So the probability is there that this actually could become a Judas swing. We just hit the optimum trade entry. If we fail and close below, we have a market structure shift and could really look forward to target. Sell side, sell side, sell side, sell side, relative equal lows, or perfect equal lows. And more sell side here. So right here, the midnight level refers to the New York local time midnight level. I always have my time set to that because it makes it easier if I share my charts, or if I say on the Discord that look at 3 a.m. if I'm like, I don't know, using German local time, everyone has to convert that, blah, blah, blah. And it's always confusing. That's why I advise everyone to just change it to UTC-4 New York time, because then when we're talking about time, it's always the same one. No one cares about your local time. If you want to know your local time, you go into your top right corner and you see it, or for Windows maybe bottom left, I don't know. But when it comes down to trading, I refer always to New York local time. So we refer to the midnight level, which opened up right here. We consolidated around that. And yeah, usually it's like we saw it yesterday, replay mode. We just use it every day and we see it being respected more times than it is not. ICT refers to it as the true day open. Yesterday we saw the perfect bounce of our midnight level, forming the, not the low of the day, but the low for the AM session after taking out that London sell side liquidity pool, still leaving those 2 AM lows intact with the bullish S&T divergence right here. Now it's just a good level to have on your side. So let's say you want to go long from, I don't know, today, yesterday was a bad example for what I'm trying to explain, but today, for example, we had our bearish value gap. We placed our short entry right on that. We placed our stop loss 1 tick above this high. We targeted the sell side liquidity pool. Ryan, one of our VIP members, targeted the Asia lows, which played out as well. But yeah, it's just a good confluence to I don't know, yes, we closed above the midnight level, but getting an entry in here and having your entry right around that midnight level, yeah, for me, it's just a nice little confluence to have, because I expect resistance once we are below it, especially if it's paired with a 2022 reversal model right here. Or if you want to go long and use it as potential support, you want it to be, you want your stop loss to be below the midnight level, because that just is a nice confluence to have. On some days it works better than on other days. But for example, right here, if you traded between 2 and 3 a.m. prior to the London kill zone, we had this highest bullish fair value gap. We had more bullish fair value gaps to the downside. We had buy side liquidity with equal highs just right here, which was the Asia sell side. What did price do? It only referred to that highest bullish fair value gap, which is paired with the midnight level. So if you get your entry on that midnight overlapping with the bullish fair value gap, for me, that's a higher probability opportunity. Hope that made sense. Same way here, we get in around the midnight level, using it as potential resistance to deliver lower. Right here with news, we just cut through it. And I think we will get a 2022 model here. Let's take a look at NQ. We have bearish SMT divergence with ES. We took out the high with that news candle. So we have SMT. Let's wait for this candle to close below our swing point. We wanted to close, otherwise I consider it being a liquidity sweep and not a structure shift. Five-minute time frame, a bullish fair value gap right here. No bearish fair value gap being left behind on the 1 minute time frame. This unfilled volume imbalance has already been filled in. Right now it looks more like a sweep. Even here on the 1 minute we don't really have fair value gaps, not even a inversion fair value gap to anchor or to look for potential resistance. So right now I'd still frame higher prices. I'm not here to call a top or bottom. But unfortunate that we didn't leave behind a bearish fair value gap here on ES. On NQ we actually did, but we didn't take out this high. We closed below the low and we left this teeny little bearish fair value gap. We repriced into it and immediately rejected. So that's pretty nice from NQ. We also had our market structure shift here, but it was prior to the news, and I would just say that's too much risk. Here at 10 a.m. entering on this bearish fair value gap with your stop loss right here. If you add some room to breathe, yeah, okay, but you never know what's happening with the news candle. We got the same opportunity after the news with a market structure shift, bearish SMT divergence, but you want to really trade the, in this scenario, the stronger one, the pair or the asset that took buy side liquidity, which in this scenario would have been ES. ES went above this high, while NQ failed to do so. That's pretty cool. 45. I didn't know you could do that. If you press shift, you can make a horizontal line. If you point it up, it's vertical. And if you put it into 45 degrees, that's pretty nice. So we're just consolidating here. Some people use implied fair value gaps where you disregard the wicks. I don't do that. I don't know. Fair value gap is a fair value gap for me. If I start doing this as well, I could see a fair value gap literally everywhere. And so far I've been doing pretty well. Not using them, so why should I bother? If you see a trade setup and I don't know, likely you have seen implied fair value gaps by some other, like, I don't know, influencers on Twitter or YouTube. If you want to get an entry and want to use some sort of ICT concept, you're always gonna find one. It's as simple as that. If we deliver from here, being the low of the day, You likely see some people saying, oh yeah, bearish SMT divergence. Yeah, we had no inefficiency here, but we had this implied fair value gap where you disregard the wicks. No, all of a sudden. Like, come on. A fair value gap is a fair value gap for me. A inefficiency. Last one we put in place was right here. Fortunately, we didn't leave one behind. Here on ES, on NQ we did, like we spoke about, we already delivered into that. And from this inefficiency right here, we wicked it. We already moved 25 points. While ES is still sort of consolidating here, we could start to see a potential left shoulder, head, right shoulder setup for the continuation lower to take out sell sign, sell sign, sell sign. Return back towards the VWAP, which is nicely lining up with the previous day's high. But I'd prefer my entry based on a fair value gap. Why? It's very simple. For example, during the London session, I'm going back to London now, 5-minute time frame. During the live stream, if you watched the recording or you were on the Discord channel watching me, right here, London opened up at 4 a.m. New York local time because of the winter, the switch over to winter time in the UK. So relatively to America, it's 1 hour later. That's why, at least for this week, we have the New York opening at 4 a.m. until the Sunday, where also people in America turn back their clocks by 1 hour, and then we enter UTC -5 here. But that's going to happen automatically. I was talking about this bearish fair value gap with the potential push. So right here, first of all, what I want to note is that we had bullish fair value gaps right here and right here. We repriced into them. We had the VWAP here, the new day opening gap, and we got our entry right here on this push. So a delayed London opening is what I was afraid of. So right here, London opened up, we didn't do much, and then we got that push back up. And I said, if I get in close above our bearish fair value gap, I will cut some risk. So if you trade with micros, I always get out with 50% out of the position once we invalidate it. Wicks to the damage, bodies tell the stories. So if you get the close above it, yeah, I simply start to cut some risk. And then if I see it go further against me, I get out of the entire position, because that's not what I want to see. So that's the reason why I like fair value gaps with my entry, because then I actually have some sort of risk management that I can use. So if we close above it, I can cut my position out early. Doesn't mean that it's failing every time we close above, but it just worked for me really well. Let's see where we're at. Still chopping here on the 1-minute time frame. You can see how much harder that would be to frame a short. Where would really be that invalidation if we were to have a bearish fair value gap here? Let's assume we had one right here, and we get short on this bearish fair value gap, and we also had our confirmed market structure shift here with the close below, getting a short in up here with our stop loss maybe being at this high right here. And once we see the close above, I would be already able to cut my risk, not having to wait for my stop loss at the high to be hit. That's why I really like having fair value gaps with my entry. I hope that makes sense. So we kept on holding this initial inversion fair value gap. Here on ES, we had a bullish fair value gap paired with that. And as we spoke about it, we wanted to see the close below. We didn't get that close, and I mentioned this is considered a sweep for me. We only swept it, consolidated, and now we're expanding further to the upside. Likely the same thing what we see on NQ. But 10.06 with bullish SMT divergence. We made a lower low here on NQ while making a higher low here on ES. You can see that entire array of higher lows that we formed here. Now we're getting that push to the upside. Bullish volume imbalance. Relief 10.13. That's a new 5-minute candle. 50% of this news wick. We're already close above that. Open up with a new bullish volume imbalance, but really not here to chase longs at the high of the day. Even if it's just a paper trading account. We had made the right call. We were looking to target shorts, but we didn't get our market structure shift confirmation. We haven't had our bearish fair value gap. So what do? We do not engage. We called it right that this is just a sweep. We saw the divergence between ES and NQ. So NQ is slightly going for that high end, the 50% of the fair value gap now. Yeah, pretty nice read today on ES. Yeah. Like I said, didn't really prepare myself ahead of the stream. Because I wasn't looking forward to trade my take profit trader account. After making a profit this morning, it's going pretty well. Let me open up my bento book. Today, 250. This week we've been doing pretty well for a FOMC week. Can't really complain. Smaller profits. I lowered my risk. I was content with 5 points. I could have went for 10 during London, but yeah, well, I'm happy with that. Sitting at a 64% win rate, up 3.5%. Only 2.5% left before I pass that challenge. And the cool thing is that I don't have to pay a pro account fee with Take Profit Trader. They have that promotion going until the 7th of November if you want to get an account too with them. So we filled this bullish fair value gap, respected this open volume imbalance. What's the time? 10:17. Bullish fair value gap. It's still struggling to get above that PMI high. DXY keeps on selling off, now having closed below our breaker block for the unicorn setup here. Close below our bullish fair value gap. This is our inversion fair value gap. Yeah, looks more like a fake out shooter swing to the upside here on the DXY, which could really help the continuation move to the upside here on the indices. Pretty glad I made the decision to not trade my funded account. Like I said, it's more important to know when you should fight, when you should not fight, to like fighting every day. Market is going to be there tomorrow and also next week with significantly less news and maybe even a better environment, especially for the AM session. I know that not everyone is able to trade London session because it's the middle of the night for most people living in America and Canada. But, well, still, no reason to force something. And if you see other traders making profit during London, to feel like challenged or something for the New York session, I have to make profit now too, otherwise I'm behind. That's silly. You don't have to prove it to anyone. We continue up higher. Let's see, timing wise, 10:19, so that's the last 1 minute candle. Then we get a new 15-minute candle. 10:15, new 15-minute cycles just started. A little bit tired today. And let's also turn on our macros. So we took the high on ES. We keep pushing up further, likely seeing the DXY continuing lower. MQ took the high as well, retraced. 15-minute volume imbalances. So this entire time where we consolidated right here was inside the macro between 950 and 1010. Also a feature of the all-in-one ICT indicator. Our initial inversion fair value gap entry would have played out during news, and after the news we just took out the low one more time, continued further up. We're almost at the high of our bearish fair value gap, so let's see if we want to expand through that here on the daily. This is the daily bearish fair value gap we're referencing. We're above this volume imbalance or old new day opening gap. Daily buy side would be residing above here. Could expect some sort of a pullback. 50% would come in right here. We have a bearish order block right here and right here, all up closing candles that we could reach for. We have some buy side liquidity, some more fair value gaps to be taken. We took the slow according to the ES set contract, but no, I don't really use them to relate to old lows. I always use the ES1 contract. On the ES1 contract, we didn't take that low out just yet. But it's a whole other discussion. So that's daily buy side liquidity. Now we have that on our chart as well on a 5-minute time frame. We simply kept holding on the bullish fair value gaps, continuing the rally up. If you look at the London session high at our highest candle, that's what supported us right here at 9 AM. Continuation up higher. Of course, that's hindsight. Daily buy side liquidity, daily high of the bearish fair value gap. We are out of the macro now. It's a new 15-minute cycle, so we could see a pretty strong push. Push has already been pretty strong. I wonder what the FOMC news later on at 2 PM will do to the price action. And there goes the high of the daily bearish fair value gap. Let's see. Not that far away. NQ is also pushing very strongly. Nice, but entry-wise, not the best one. 5-minute time frame. No fair value gaps. Lower low, lower high. No bullish fair value gaps for a potential retracement. Okay, we took the high of the daily bearish fair value gap. The daily buy side liquidity we referenced was right up here, and the daily bearish fair value gap disappeared. 15-minute volume imbalance right here and right here. 2 consecutive ones. We see using the indicator with the multi-time frame volume imbalances. So right before we started that push, volume imbalance. Right before we started this push, volume imbalance on the 15-minute time frame. But it's really up to the traders and the trader, the specific trader and his rules, to be honest. If they like longs in a premium, if you had the bias that we're going to continue higher during New York, fill in the entire daily bearish fair value gap, then a continuation entry would have been possible, chasing the momentum right here after sweeping liquidity, consolidating and pushing back up, having a highest close compared to all these closes. retrace into the fair value gap. This would have been really the only possible entry to catch this move. You also had the opportunity to take a volume imbalance entry. We had this bullish volume imbalance once we closed above the PMI news high. And like you saw me taking a short somewhere around here based on a bearish volume imbalance, those are my aggressive entries where I place my limit order right here at the close of that previous candle. And I keep on holding usually for 5 points, my stop loss being the low of the candle prior to the volume imbalance. And if I see it being closed, then I also exit. I wanted to remain open for the aggressive, relatively speaking, high risk entry opportunity. In Q with a nice push. Yeah, but I think really that almost concludes the morning session for me. I didn't plan on doing a live stream today, but anyway, did one. Got stopped out at break even here and stopped out on a little short inside this consolidation. So overall that Apex paper trading account is down $105. Let's see what we do inside this bullish value gap. If we use that to continue higher, but it's really starting to get hard to frame longs with a, let's say, healthy stop loss. We could start to retrace now. DXY likely broke the low. Yep. And what do we have here on the DXY now? A bearish market structure shift. Perfect. What do we do when we have a bearish market structure shift? First of all, we measure the last manipulation to the upside in this case, from the high to the low. We use our standard deviations to look for potential targets. Let's see what the standard deviations line up with. 4 standard deviations would take us pretty low. 0.5 would deliver us into these equal lows right here. We have some more sell side below this low. And relatively speaking, expecting a continuation to the 1 standard deviation is likely. That's what we did up here, starting from 8.30, pushing up till 9.30. 9.30 made the switch, and we continue to deliver lower. We potentially have a fair value gap right here to enter on. This candle right here would be our breaker block, the lowest down closing candle between higher high and highest high. We have 2 consecutive down closing candles, so we use both of them as our breaker block, which is overlapping with a bearish fair value gap right here. So yeah, just really, if you trade foreign currencies, looking for shorts would be the smart thing to do. Now we would have that confirmation. Market structure shift, breaker block, bearish fair value gap, sell side liquidity here on the DXY, being the London session low and the Asia session low. A low from yesterday. We took out the previous day's high. During London session, we took out daily buy side liquidity from there somewhere to the right. With this last pump up, market pumps up, dumps down, gives us the 2022 model. So on the Euro US dollar, you likely see something like that. Just the DXY inverted. We could check that out. 6E1 Euro FX futures, yeah. A little bit more news impact, but you get the idea. We have that same manipulation leg starting at 8.30, and at 9.30 we magically happen to turn around. We did not close above it yet, but we're likely going to. We have our buy side liquidity being the London session high and the Asia session high somewhere up here. And that's roughly what the DXY looks like, but yeah, flipped on its head and without the news impact. NQ consolidating now. Let's see if we want to hold on this first bullish fair value gap. my stop loss would be once I sit close below it, so I'm going to use a safety stop loss. Looking for 5 points. This would have been the preferred entry. Buy side above here. NQ took the high and is starting to reject, so that would be bearish SMT divergence. High risk entry, of course. You don't want to go long at the high of the day, really. Now we have confirmed bearish SMT divergence. We took out the high on NQ. We didn't do that on ES. So once I get the confirmation close below that highest fair value gap, I'm gonna cut risk and get out of this position. Let's see if we have anything on YouTube. Yes, I'm going to trade tomorrow, because tomorrow, it's not Friday yet, at least I think. No, it's Wednesday. Tomorrow's Thursday. I don't think we have any news on Thursday. Only unemployment claims, but we get them every week. And yeah, on Friday, no, usually not. Maybe during the London session, do a Discord VIP member live stream. And yeah, New York session, won't be trading that. Question on Discord, let me open that up. Set N1, let me take a look at that. Set N1 Treasury futures, daily time frame. My chart's not inverted, is it? Yeah, it is. Strong downtrend. Now above this high. I don't really want to call it a market structure shift, because it's a break of structure, that's for sure, because we start to put in place higher highs and higher lows. Now we closed above that. But really, if we look at the major structure, we form a high, a low, a lower high, a lower low, and all this here is going to be internal before we maybe make the next lower high for the lower low. You would like to see, yeah, if we would have taken out this low right here with this candle, something like this, and we look for the highest point between those two lows, it would be a market structure shift for me. But because we didn't, that's, yeah, not the best market structure shift. That's a break in structure. Keep in mind that we are inside a bearish value gap, and that right now we're still trading counter trend. The trend is obviously bearish. I would wait for, I don't know, it's not always about catching the low, it's keeping track or staying on track with the specific asset. If we get our market structure shift on the daily, I think we will have many more opportunities on our way to take out all this buy side liquidity, because yeah, we have equal highs up here, buy side, buy side, buy side, buy side, buy side. We're not going to get there with one single daily candle. So yeah, before really switching the bias to longs, you at least want to see a proper market structure shift and not just some very small range, higher highs and higher lows. If we would measure our retracement from the most recent lower high and look for potential fib retracements to the low, we're about to hit the 50% as well. Maybe short-term bullish if you trade it on a low time frame, but on a higher time frame, I personally would remain bearish. If we go to classical charting patterns, this is our pole, and this is currently forming our flag for a continuation lower. And if we would turn it around, sometimes it really helps to simply invert this chart. So if you would look at this, would you think we're gonna drop here, forming a high? Or does this more look like a expansion, pullback, continuation? Veto. I think once we flip it on the head, it's pretty clear. We have some sort of trend line liquidity here. Where's our high? Let's get rid of that. We're inside a assume it's bullish fair value gap. We get our retracement in. There's still the off chance that I'm wrong and we get our displacement from here. But right now, I'd say it's too early to call longs. Maybe intraday, but long term, I would like to see this high being taken out, close above it, retracement, then maybe a second leg. Then we would see the same thing which we saw up here. Well, that's beginning of this year. We left behind a high. We didn't take that out, but market structure shift wise, this is pretty hard. Maybe on a weekly time frame. Been heading down for a long time now. Took out the high. Let's say really shifted structure, back bearish down here. Nah, just messy. It's hard to even analyze. Take a look at NQ. NQ is pushing back up. Same goes for our ES trade. We kept on holding on this bullish fair value gap. We now took the high. So I'm going to adjust my stop to these lows. I want to see the continuation for 5 points. We just took the high without continuing higher. We once again have bearish SMT with NQ because NQ didn't take the high yet. If you have some other charts that you want me to take a look at, feel free to suggest them. And make sure to like the live stream. This really helps it getting or putting it out there. If you enjoy watching it, really appreciate that. Okay, we close above the high. Put our target on that daily sell side liquidity. Let's see if we can continue up higher after going sideways here for a little. It's 10:38. Let's see what we do around this teeny tiny bullish fair value gap. NQ also took the high, so there's no bearish SMT divergence anymore. So this has the potential to deliver the retracement if we close below this level. I don't really like that we didn't really respect the fair value gap after closing above the high. So I'm gonna get out of this trade with a minimal loss. For me, it's more like, okay, we take buy side and now we take sell side. If we keep on consolidating here, that's not really what I want to be involved with. We leave behind inefficiencies, we do not respect them. So theoretically, this would become a inversion fair value gap. Going long at the high of the day is usually not what I do anyway. We had the potential. We saw some movement from our highest bullish fair value gap right here. 4 points. Now we read price into it. That's just not the delivery I want to see. But we already had a pretty significant expansion after the New York Open. our daily target would be up here. So now we closed below it, retested the bullish fair value gap, closing immediately back above it. Just adjust my rules, my risk management approach. And usually once I see that getting out at break even, it's not even worth it to me entering again, because I right at this point in time know that I don't really trust any efficiencies that are being left behind. Now we're back below it. So overall, I think that's pretty good. NQ also going sideways here. What do you guys mainly trade? Is it only ES and NQ like it is for me? Or do you also trade foreign currency pairs like Euro US dollar or gold, for example? I would like to know that. Feel free to share it in the chat. We got to 10 likes. Let's go. Anyone trading gold here? Gold futures or the regular CFD contract? Close back above it, no holding. Let me get rid of my limits here. Take a look at oil. Oh, yuck. Weekly time frame, daily time frame. No. No, I got the notification that Bitcoin broke 35k here. Filled the CME gap. More to the upside. That's pretty nice. CME gap. Talking about crypto, are there any crypto fans watching the stream? Silver. I saw something on. Okay, that's not working. Crude palm oil, copper, micro gold, wheat, corn, soybean, treasury notes, Brent oil, platinum, coffee, gold, soybean, cocoa. No, don't find it, but let's take a look at coffee futures. Go to the 5-minute time frame. Let's see how that behaves. Pretty wild. Equal highs, market structure shift, bearish fair value gap. Yeah, possible to trade. But once you get the moves, they're usually pretty aggressive. I don't know. I just like to trade ES and NQ. I've sort of, when I started trading, I tried to trade them all, but I don't. After a while, I didn't really see the benefit in keeping on doing that. I then decided to try to really master one, get a feeling for how it moves and how it behaves, and for me that really just ended up being ES. I know when to trade it, when not to trade it. Yeah, just having that good feeling for it. If I switch over to gold right now, yeah, I'd still would apply the same concepts, but because it's behaving differently than ES, I'd still would feel like a freshman or a newbie. And yeah, I don't know why why you would need to trade more than one asset. Doesn't really make sense to me. I mean, one is more than enough, I think. Bullish volume imbalance, that could have been aggressive entry, but I already switched off for today prior to the FOMC news. I think we could run for that daily buy side now. From our initial entry of this bullish fair value gap, had many fair value gaps to pick from. We ended up, because we're super bullish, only using that first one. And why? Because I've spent so much time watching and studying ES instead of studying 100 or 10 different charts at the same time. I really focus and put my effort into one chart, getting to know its patterns, its usual behavior, and yeah, ended up choosing ES over NQ because it's just a little bit more precise. It has less decimals, which is the reason, I believe at least, why it is more precise. Yeah, and that's the end of the story basically. But let's see. Waiting for retest of breaker block. Are you going to only 500 EU? Waiting for retest of the breaker. Yeah, like we said, when we looked at the DXY, waiting for the retest of the breaker block would be a smart thing to do. Assuming that, because we're still continuing to the upside here on ES, that the DXY is still continuing lower. But if where we already took these equal lows on the DXY, we likely already took that out on the Euro. No, we didn't yet. Just be aware, I'd close my limits or cancel them prior to the FOMC news. It's not really worth the risk. You know, with futures, you don't really get slippage. That's at least something nice. If you trade with CFD firms, yeah, they just slip the shit out of you. And instead of a 1% loss, you actually end up losing, yeah, I don't know, 2 or 3%. Also depends on which firm you're with. They always blame it on poor liquidity, blah, blah, blah. Yeah. I'm in a Forex pairs, gold, and stuffs like German 30. Okay, so you have a very broad watch list. I'm in buy on gold, holding up to 998, in at 1982. Let's take a look at gold then. What's this? 1047. Interesting. Let's do it on the Nasdaq chart. GC1, gold futures, COMEX. Okay, you're likely trading a CFD. Gold futures already went above the 2000s. Just with the PMI news at 10. Interesting. No, I'm a firm believer of just looking at one asset most of the time. I only use the DXY sometimes as confluence, the NQ chart for divergence, but now I don't really have to look at it because I have the indicator on my side, which shows me the SMT divergences. Usually I'm a little bit quick and it's just a quick click of a button, but I don't know. I think you don't need to trade more than one asset, really. Of course you can, and it's more fun, but I don't know, I just found that for me that it doesn't really benefit me. I'm already spending enough time in front of the charts with just looking at one asset. I think 2 or 3 assets more wouldn't really help me. Alright, I think this could get interesting. So right here, if we look at market structure, Let's use the indicator for it this time. We're inside the macro between 10:50 and 11:10, so this is our last macro before we head into lunch hour, and lunch hour before PM session and FOMC news. Right here, you can see we made a higher high, higher low, higher high, higher low, and higher high. And what are we doing right now? We're breaking the most recent higher low. We are at the high of the day, so this would be considered a market structure shift. You could also use the ICT all-in-one indicator to tell you that. Break of structure, market structure shift. I like to do it manually. It's easier for me because yeah, I've only got one chart to look at. And my daily target for my funded accounts, 50k accounts, is simply 250 bucks, and getting 250 bucks out of a yes per day, it's really not that much. If you trade one mini contract, that's only 5 points. Getting 5 points out, cutting your little piece from the cake, I think that's possible. More than possible, really. The break of structure is only being identified if we close below it. You can modify that in the settings, going down to the bottom. SMT divergence, regular trading hours, gap session, liquidity, multi-time market structure. You can choose break of structure confirmation based on wicks or close. I have it set to close, so that's why it didn't show me the market structure shift right here. And same way that we saved us here, we made that high. We had this initial bearish momentum, but we only managed to wick the lows, and what we do afterwards, we rally to the upside. We want to make sure we do not get, we not try to chase or anticipate a market structure shift, even if it's not there yet. Let me check in queue. Yeah, here on NQ, the market structure shift is valid. We even close below these equal lows. So yeah, entry for me would really come off this inefficiency here on NQ. I would draw it in. Timing wise, we're also inside the macro, so that's nice. A 20-point stop loss, target, yeah, simply a 2-to-1. Don't want to be greedy here. Or sell side liquidity with the VWAP, that's fine. A 5-minute time frame, nah. Not on FOMC news day, but yeah, it's valid to answer your question. On yes, it's not valid yet. We could still, simply fill the fair value gap and then continue lower. But those are the rules. And if you break them, you might as well not have rules at all. That's more fun. More fun doesn't mean more money or the consistency that most traders are after. Ba-bum, 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 bum, bum. 20 seconds to go. Always look at. Alright, let's see if we get to close below. Yeah. Still kind of messy. Our lowest down closing candle, market structure wise, would be this one right here. So this would be our breaker block. We have all these equal lows. Right here, sell side liquidity. Let's get in one entry at the breaker block and one entry up here. Because now we have the confirmed model. Bearish value gap. Let's look at the 50% of that. And 50% of the breaker block. Be aware, this is a new 5-minute candle. With the next 5-minute candle, we get a new hourly candle, which simply could continue with the momentum. But it's a pretty good bet. I still don't take it on my fund account. Like that. You gotta stick to the rules, so you don't have rules at all. Make higher highs and higher lows. We close below that most reason. We have equal lows, so we could at least target these equal lows or some little retracement. But we have more equal highs here. Really like to see that fair value gap though to be filled. Took an anticipatory entry just based on a breaker block. That would be the last trade for me today on my paper Apex. Stop loss really 4.5 points. It's decent. So we're gonna buy 2 above here. Put it 1 tick above. Always and following protocol, we measure our last manipulation move to project specific targets, and for standard deviations will deliver us back to the the regular trading hours opening gap, sell side liquidity, VWAP, previous day's high. We will see. Any other questions? I won't be sitting here waiting for this trade to play out. I mean, we analyzed it on stream. I didn't plan on streaming today. I just did it for the fun of it. Because I enjoy it. We would have our 2022 model at the high now. Not the cleanest one, gotta admit, but a model is a model. Took an anticipatory entry on the breaker block. We've got filled on that. But right now we're sort of consolidating. Be aware of the time. If you look at a time-based chart, it's 10:58, 10:59, 11 a.m. We're inside our macro, which is right now forming. Last macro before we head into lunch hour. And then later on at 2 p.m. we get FOMC news. Who knows what's going to happen till then? Maybe a retracement, maybe the continuation to daily buy-side liquidity, which is residing. Oh, no. Breaker block was that. Order block, sorry. So yeah, we filled the daily bearish fair value gap. It doesn't mean it has to end. Sorry about that. 10:59. So 40 seconds to go before we get our new hourly candle. Usually what I do then is check the hourly time frame. The hourly time frame couldn't really be much more bullish right now. We took hourly buy side. Look at that. Look at that. Perfect. We didn't take that hourly buy side. We have a hourly bearish fair value gap paired with it. We have more hourly buy side above. Yeah, we could see a retracement with that new hourly candle, but just keep that in mind. Let's try to keep the chart clean. Bearish fair value gap. Okay, new hourly candle is in. New hourly momentum should follow the next 5 to 10 minutes. Right now it seems a little bit more indecisive. We can take a quick look at NQ. Same goes for NQ. We would have been tagged on our entry. But right now we're also just consolidating. On YM, we also had a similar run to the upside here on a 1 minute time frame. Market structure shift didn't came in here yet on YM. I don't trade YM, I don't really look at it. EU still looking for the retracement to the breakup block. No, the breakup block would have come in right now. Highest up closing candle. DXY, same thing here. We've now hit our bearish breaker block. We took these equal lows. We reversed from the low of the day. Ideally, you'd like the entry before we take that sell side liquidity. We could still... Now we even swept this low right here. I don't know. FOMC news, I wouldn't be surprised if we get that seek and destroy pattern in. Like said, it's wise to choose the battles you fight wisely. And for me, that simply applies to FOMC news days. It's like seeing a big army with 1 million soldiers in front of me, while I'm commanding an army with, I don't know, 50,000 soldiers on my trading account. I'm like, is this wise? Will we all get killed or blow up? Likely. Alright. Live to fight another day would be the wise decision here, I think. But let's try and see if the 2022 model plays out. We're still in the macro. I will stream until 11:10, where I see that invalidation, and I get my, I don't know, my tap on the shoulder for sticking to the rules, not executing on my funded account today, even though we got a model because of FOMC news. I executed during London, saved my profits, no reason to give them back. Even though we get the opportunity, like I said, it's wise to know when to fight and when to retreat. You can still practice with paper without getting hurt. That's a cool thing with trading. Any questions, guys? Discord, YouTube, feel free. Because that's getting closer to the end of the stream, we will all know if this trade played out or not. I will leave it on my chart. My take profit target, I think for the first contract, I'd simply target these equal lows. Low hanging fruit. Make sure to get paid. I think that's what we're all here for. And then maybe a little bit of a deeper retracement. Our second fill came in right here. 10 points. Almost 5 points, good enough. But I can already see that hourly candle put in some new bullish momentum. 11:01 bullish volume imbalance. 11:03 bullish volume imbalance. Now we're hitting the 50% and the high of the bearish breaker block. Keep in mind we have that hourly buy side liquidity right here where our stop losses paired with almost perfectly the 50% of that bearish fair value gap here on the hourly time frame. 5 minute time frame, hard to see a market structure shift on the 5 minute. And in my not most recent video, but in the video that I uploaded last Saturday, I was really talking about what's stopping for most traders to really get funded. And in my opinion, it's really the lower time frame. It used to be that same issue for me. And once I made the switch to at least the 5-minute time frame, that really when it started to play out or work out for me much better, because yeah, most traders simply get lost on the lower time frames, especially seeing yeah, their idols or other influencers on Twitter posting charts from the 30 seconds time frame. Not really a fan of that. Yes, you get less setups, but you also yeah, are less involved, and sometimes less is more, especially I think when it comes down to trading. The only model we would have seen sticking to a 5-minute time frame would have actually come in during the London session. Then after news, yeah, we got a new model. We made lower lows, displaced, but we never got the retracement into a nice fair value gap unless you trade this liquidity void here basically on a FOMC news day. That's pretty much up to you. You get less setups, but I really think less setups are in some way more setups and better setups. You're less emotionally involved, you set your stop loss and you take profit target. You get out and you're done. Really, yeah, just playing it cool. Instead of, 1 minute time frame, this looks like that, and oh yeah, this could be an opportunity for the continuation up, and oh yeah, this could be that, and I know what the market is going to do 100% of the time because I know how the algo works. Well, I don't know, I don't want to say it's almost foolish, but it kind of is. So we perfectly respected the breaker block. That's looking nice. We're starting to reject. Let's take a quick look at NQ. The macro is not over yet. NQ also filled in this entire bearish fair value gap. That's what when we would like to see the continuation lower now. We still have these perfect equal lows. We also have them here on ES. But we also have new bullish inefficiencies right here in our higher time frame buy side liquidity. But I'd say probability wise, getting short at the high of the day is always better than trying to go long at the high of the day. You wanna sell high and buy back lower, and not buy high and sell even higher. Rejected from the 50% of our 5-minute bearish fair value gap right here. Respected the breaker perfectly. That's all signatures that we would like to see. We closed right at the low of this bullish inefficiency, open up with a bearish volume imbalance, which really could help us delivering into these equal lows, but of course doesn't have to. Like I said, we still have this hourly buy side above us, new hourly momentum, could negate all this consolidation that we saw right here, and also don't get fooled by the 1 minute time frame or carried away. It sometimes really helps just looking at the higher time frame to see if your idea makes sense if you go just from the 1 minute to the 5 minute. And here on the 5 minute, it's really tough to see. Yes, we could simply take out all these equal lows, but in reality, we're just consolidating right now here on the 5 minute time frame. On the 15, it's really hard to also frame something else. Maybe we retrace into a 15-minute bullish. We could see that possibility. But I think it's easier if everything aligns. We closed in this bearish volume imbalance, back inside our bearish fair value gap, back above the 50% of our breaker block. Let's see, no new questions. And it is almost 11:10, so that's gonna be the end for me. Only futures and check Bitcoin. So that's the end of the macro. Didn't do much really inside of it. Also the new hourly candle didn't do much. I will leave this paper trade running. So unless there are any more questions, that's going to conclude today's FOMC live stream. Like said, if we look at the probabilities for a interest rate hike, they're almost at zero. Of course, they can't be zero. It's 0.8% that we will see a interest rate hike in America. We stayed flat over here in Europe with the European Central Bank. So we either get a decrease in America or we stay flat. What the market is going to do with that, hard to tell. Like I said, the order book at that point in time is really, really thin and easier to manipulate. So that's what I would be looking for. Maybe we will hit the first target on our equal lows right here. Like I said, that next target is simply 10 points from that. Kept respecting everything still. Like always, if you want to find something against your trade, you always find something. But reversal setup at the high of the day. We wait until after the macro to deliver into our equal lows. Let's see. First profit target with all these equal lows should be really possible to hit. If we hit that, I'm gonna modify my stop loss here to one contract because I'm already making sure I'm taking out my first partial. Nice. I'm moving my stop loss, not really to break even, but at least to this high. I don't want to see price getting back up into it. We closed below the low, so that's good. That's a good sign. We have our breaker block, bearish value gap that played out. Hope some of you got into that. I just have my rules preventing me from trading the AM session, FOMC. It's also past my typical entry time. Still nice to see it playing out from the high of the day. That's what we would want to see. Now we could really get that acceleration lower, hit our 10-point target, and put our Apex paper trading account into profit. Nice. Look at that. Macro is over. Like I said, usually that momentum from the new hourly candle can be delayed by 5 to 10 minutes. We open up the new hourly candle when we really start to move with that new 5-minute candle at 11:10. 11:10, new 5-minute candle. That's when we start to go lower. So that first 5-minute candle, starting from here, opening up here, forming the low and the high, pulled back, gave us the entry. And with that next 5-minute cycle, we continue to expand to the downside. Pretty cool. That's why it's always important to look at the time. Take a look at NQ. Also delivered from our entry of the bearish fair value gap. The fill would have happened right here, 2 to 1. Also likely going to be hit. We had the same high of the day. We do not have any S&T divergence in play. ES. Having a couple of 1-minute bearish fair value gaps, but I think we consolidated at the top for long enough, distributing from longs to shorts. Maybe just retracing because we still have the potential that this ends up just being a retracement into any of these fair value gaps really on a 15-minute time frame. I think it would be healthy to assume that we get some sort of a retracement. If we look at the current daily dealing range, we measure from the low to the high. The 50% would come in here at 4 to 20 basically. Would be a healthy target, retrace to the 50% to continue up higher. We don't have to do that. I already secured my partial. Won't move my stop loss to break even. No, I don't think so. Sorry, what I would like to see now is this momentum to continue lower from this lowest bearish fair value gap. Would really like to see a immediate retracement into our highest bearish fair value gaps. But yeah, I think that's concluding today's session. In the end of the day, we got our account back in profit. We're almost close to passing our funded account or our Apex paper trading account, which is me trading on the days where my rules say it's better not to trade. And I'm really glad I'm doing that. Not feeling like I missed out on something. It's still good to get the practice in. Practicing without getting hurt. I locked in my profits for this FOMC news day. And like we said, we left our 1 minute bearish value gap and continued lower, making a lower low. Let's see, our target was set at 10 points, and I hope you learned something from today's stream. I think there was lots of value in it. Let's see if we have any more questions. Come on, one more tick. Nah, screw you. It's not worth it waiting here. My stop's at break even. My take profit is 10 points. And just like that, that's 500 bucks. Who makes 500 bucks spending 2 or 3 hours in front of the computer? Really, not that many people. And yeah, I think it's really healthy to have your daily profit target. And that's also the reason why I don't think it's necessary to trade on more than one, or trade more than one asset, really. I mean, with this simple move, made enough money for the day. With our 2-to-1 likely on NQ as well. No, not yet, but we're getting there. Maybe, we will see. We had our 2022 model. We were there, we executed on it. Even if it's just paper, there's no difference. Try to treat your paper trading account as it would be, like you would treat your funded account or your Apex or Take Profit, Topstep, whatever challenge, FTMO challenge, who cares? Really try to treat it in the same way. Use it as practice on the days where you prefer to simply secure your profits, and if you have to spare time to trade another session, practice. You can't get enough practice. And that's what I'm doing right here, trying to show that there's no shame in trading a paper trading account. All that is set. Like said, my take profit trader account. Come on. It's up to 50 today. No reason to give that back. Yes, you could always add capital to it, but it's not the day for it. If it would have been no FOMC news today, I would have traded on my funded account, but it isn't, so I stick to the rules, and I'm happy with that. All right, guys, thanks very much for sitting in here today. I don't think we have any more questions on YouTube. Nice. Money back needed. This confidence boost followed ICT concept, but without help I kept making small mistakes that led me to break even or small losses. Exactly. You just need that patience and knowing that it's not a sprint to pass your funded account or whatever. It's a marathon. And these small losses, they do add up in the same way like small wins do add up. So yeah. All right, guys, that concludes it for today. Thanks very much for joining in. I will be back tomorrow, maybe even during the London session with the VIP members. If you want to sign up to the VIP membership on our Discord and to get access to the ICT all-in-one indicator at the same time and all the other indicators, weekly outlooks, all the trading journal, the Google Drive access with over 20 PineScript codes. The link for that is right here on bob.com in the description box below. there's a 10% discount for the ICT All-in-One Indicator using the code AZ. And yeah, that's gonna be it. I won't start a discount for the VIP membership. If you compare it to most other memberships or mentorships, it's pretty cheap relatively. And yeah, I think that's a fair price for the amount what you get. You get to ask me questions around the clock, review your trades, and yeah, access to all my live streams without annoying YouTube delays. We just hit our profit target here on ES, delivered lower from here. So let's check our paper trading account. $500 away from passing it. Let's go. Consistency. That's all we're after. That's what we can rely on. Yeah, possible maybe even a retracement to the VWAP. Could see that coming. We still have that regular trading hours opening gap. Reversal from the high. Doesn't have to happen. It's a possibility. And yeah, I think that concludes my charting time today. We have FOMC news later at 2 p.m. So if you still have any running positions, I will check on them later. And yeah, guys, thanks very much for joining in. Really appreciate it. Thanks for liking the stream as well. Like I said, if you want to join the VIP membership, the link for that is in the description box below. And other than that, I will see you tomorrow. Take care. Bye.